All right, we are live. Welcome back, everyone, to another episode of Wall Street Rundown. I'm your co-host Billy. I got Wale with me. What's up, Wale?
What's good, Billy? How you doing?
Good, man. We missed you guys last week. I know we had a little bit of scheduling conflicts and all this stuff, but we're definitely back, and we're excited to be back. And there's a lot to cover, man. Well, let's start with how this market looked like this week. I mean, if you guys look at overall, nothing really was happening. I think everybody was waiting for NVDA to report, waiting for PCE numbers to come in. And now I think we're waiting for Jackson Hole to happen. So we kind of like stuck in like this pattern. If you look at SPY, if you look at SPX, if you look at QQQ, nothing really is moving from that perspective. I think we're still stuck on the range right now. S&P 500 was today was there's not a lot of change. I mean, we got about 1.2% so far. And the Dow Jones was also 0.21%, NASDAQ 0.08, Russell 2000 with 0.10%. All this is in the negative also. So far today, even like last week, we just been trading sideways, guys. We haven't really gone anywhere, and we haven't really done anything at all when it comes to the stock market. I mean, if you look at some individual softwares, we've seen some movement here and there, but overall, we haven't really done anything at all. When it comes to this week at all. Even last week, I think last week we kind of probably seen some movement here and there, but we haven't really seen a lot in there. But Wale, man, let's get some of your input on this week's market and how the stock gonna move. Basically, we had a blah week, in my opinion.
Yeah, if you look at I think the last five trading days,
Mhm.
I'm just looking at the candles. You're not really seeing much movement. I mean, SPY been stuck between six the last 4 days, been stuck between 768 and 762. So you're talking about a $6 range in like 4 days.
Right.
So nothing has really happened. I have absolutely hated the last, I'd probably say like 2 weeks of trading that we've had in the markets because you really haven't seen any like real follow through in one
Nope.
direction or another.
Nope.
Like you'll get a drastic drop down followed by a drastic drop up. And you look at all like the intraday candles, you see lots of wicks at the top, lots of wicks at the bottom. You see a bunch of consolidation. So
Right.
for a day trader, intraday trader, we haven't seen a lot of movement. The VIX also has been kind of like dormant. It hasn't really done anything either. I think we've been stuck between, 15 and 16 for the last, call it 1, 2, 3, 4, 5, 6, 7, 8 trading days. Haven't gone anywhere either. So we got some big events this week. PCE came out this week. We had NVDA
Yep.
earnings coming out this week. And then we got Jackson Hole, which is not a Fed meeting, but it's kind of like a pretty, I guess, high level event with Fed members, sort of gathering together to talk about what their next plan of action is going to be. So
Yep. Yep.
we'll see if we kind of get out of this range. But NVIDIA was I guess, one of the bigger catalysts everybody was waiting on. So we'll get into that a little bit later.
Yeah, I was hoping Nvidia would send us a different direction, but we will see when the market opens tomorrow. But before we get to all the earnings, let's talk about this crazy CPE. I mean, before the opening bell today, we got a fresh batch of economic data. I mean, it gave us kind of a little bit of heartburn, right? It wasn't too much, but it was enough to create some kind of some scariness in the market. I mean, the PCE came in at what 3.7% year over year, which is probably I think 0.1% higher than what they thought. They were speculation about 3.6, 3.7 came in. I mean, it wasn't a total disaster, but I think it was enough because if you look at the bond kind of went up a little bit, when that happens. So, what's going to happen to Federal Reserve right now? And I think we talked about the possibility of rate hike. I think this might just add another notch on top of that, that we definitely will probably be getting some rate hike for the end of the year. So, let's talk a little bit about that, man, because this number I think is making a lot of people nervous.
Yeah, I think the PCE numbers, when you dissect it, again, to me, the way I look at it is how far away from the Fed's target. The Fed's target is 2%. We're nowhere near 2%. And at the speed at which we're going, we're moving in the wrong
Wrong
direction
direction.
towards
Yes.
2%. Kevin Warsh talked the big game, talking about how, you know, his goal is going to be to get back to 2%, and he kind of says that they will. But doing nothing and just watching the bond market on your own, and I guess what his stance is that the market will sort of adjust on its own. And the 2-year yield has gone up, the 10-year yield has gone up, 20-year, all the yields have moved forward.
Yep.
But we're not seeing any dents in inflation. I saw towards the end of today, USO moved up higher. So we don't know how that's going to affect, next month's data.
Mm-hmm.
But
Mm-hmm.
the Fed, to me, they just ball watching right now. They just kind of staring at the sky. They're not taking any action. They haven't done anything. Um, you know, I think the speed at which inflation is moving, I guess, is encouraging. But the fact of the matter is that if your mandate is 2% and you're telling people that you will get to 2%, the question is, okay, what are the steps for us to get there?
Right.
There's only so much that the Fed can do, right? They can raise rates, they can provide liquidity, they can buy bonds in the open market, they can sell bonds into the open market, but they haven't really done anything. We heard what last week Scott Bessent was talking about how he's going to increase buying back bonds on the longer end
Yep.
of the curve.
Yep.
Um, and from 2 billion to 4 billion, rates dropped for a bit, but then came right back. So to me, the long-term solution is that the United States needs to be more fiscally responsible. But at this pace, we just know that that's not going to happen because if you listen to what Scott Bessent said, basically he's financing buying back those bonds on the longer end by issuing debt on the shorter end. So you're not really fixing the problem.
Nope.
So you're buying back debt by raising debt. So I don't know, man. I just
Scott needs to get his priority together anyway, because I've heard that he's planning on buying some of the Japanese yen because he's seeing some issues there too. So again, if the Japanese have to support the economy, guess what happens? They gotta sell the bonds, and they own a lot of the United States bonds. And if that happens, that's a big problem.
yeah,
So
the Treasury is trying to prevent Japan from selling U.S. Treasuries because I think, if I'm not mistaken, Japan is now the biggest holder of U.S. Treasuries now.
mhm,
So, and
mhm.
if Japan starts dumping Treasuries, it's a lot of people that are going to be in trouble. So
Yep.
we'll see how it plays out. To me, it's one of those things that only time will tell. Like, you can't time these things. So you just got to be patient and see what happens in the long run. But yeah, the
Yeah.
PCE number, not scaring anybody, but also not moving in the right direction either.
That is a fact. Let's move on to some of those earnings, man. I feel like the whole trading community was like a stadium today. Everybody was waiting for NVIDIA to do something. Oh man, it just felt like everybody was just holding their breath trying to see what NVIDIA is gonna do. So NVIDIA finally reported, they reported good numbers. I mean, they reported some really good numbers. But let's look at overall, where are they right now? Nvidia's up 4.1, 4.4, maybe 4% after hours overnight. Not up crazy, but it's up. It's up there. Did we hit all-time high? I think this is all-time high.
No, all-time high is 232.
Yeah. So we're not even near all-time high. So I don't know, one, if this number gonna hold up after the market opens tomorrow morning, or two, this is not the move I expected after earnings. So I am not sure how the investor's gonna feel tomorrow morning once we open the market. So let's break down the numbers, Wale, if you have it in front of you.
Yeah, so actually I lied. The all-time high is 236.54. I
Oof.
didn't I didn't go back far enough. But high expectations coming into the print. The stock had a losing streak of 1, 2, 3, 4, 5, 6, 7 straight days of finishing lower
Mhm.
than the open. So the stock did not run up into the earnings. But the numbers were good. We had $96.2 billion in revenue. We had 106% year over year revenue growth. And data center revenue was 89 billion, which was a jump of 117 billion. And next quarter, their guidance for revenue was 108 billion. So what we're seeing is with the revenue growth that the demand for their product has not slowed down. When you take a look at the bigger picture, um, we're not seeing a lot of fireworks with the stock over the last couple of days. I mean, if we just look at the last, this is a 3 month chart of NVIDIA I'm looking at right now. Yeah, we've been stuck between 232 and like 189.
Yeah.
Hasn't really had a lot of momentum. If I'm not mistaken, it might be trailing SPY for the year. So we'll see if this is a catalyst that eventually gets NVIDIA moving higher. Now, I will also say this. You have to understand that NVIDIA is a $5 trillion company. So the speed at which it's able to grow probably is not going to be as magnified as it was back in like 2023,
Facts.
2024.
Facts.
So you get to like $5 trillion, it's kind of like, how much more growth can you expect at that level?
Mhm.
I heard Kramer talking to Jensen Wong about could they use more of their assets for buybacks, but what they've been doing a lot of is helping finance a lot of these companies in the AI ecosystem,
Mhm.
so for providing capital so that these companies can be successful. So it's almost like NVIDIA is like the big venture backer for all of these startup companies so that they can, you know, get their product off of the factory line and start to really, really, really grow. So, you know, is it still a growth company? I still think it's a growth company.
Mhm.
Is it a hyper growth company like it was maybe 2 or 3 years ago? I wouldn't say that, but I still think it's a pretty good aggressive growth company. This is probably one of those names that you just hold on to as long as you need to, and try to get in at attractive prices. But I mean, even with the high expectations that NVIDIA consistently has on these earnings days, it always seems to find a way to beat.
Yep.
So,
Yep.
I think that if it missed, I think we'd be in trouble. So,
We'll be in big trouble. Yes, yes.
exactly, exactly. So,
Yep.
but the funny thing is, though, the QQQ and the market have been able to make new highs. Like I would look at SPY, right? SPY has been able to make all-time highs without the
Without, yep.
assistance, the
Yep.
assistance of NVIDIA. And to me, it almost seems like some of the memory names tend to hold a little bit more weight as a collective group rather than just NVIDIA. Because I remember back in a couple years ago, NVIDIA was carrying the market like LeBron versus the Detroit Pistons back in the
Yep.
day.
Yep. Yep. Yep.
But it's not as much anymore. But I know SPY's up in the after hours, QQQ's up in the after hours, but NVIDIA continues to do what it does, man. So
Yeah.
happy to
Yeah.
to see that it's continuing to move in the right direction.
Yeah, one of the numbers that kind of blow my mind is like it's the mind-boggling $89 billion when it comes to data center. I mean, that's a crazy number. That's like up 117% from last year, you know? So that's a crazy number. And for them to like say the monster guidance, they went from like, the estimate was 104 billion. They said, nope, we're gonna do 108 billion. Like that's I mean, I don't see anything wrong with their numbers. Like, unless if they like fail to deliver all this thing they keep talking about. But I mean, this is
Yeah,
some crazy, crazy numbers, man.
yeah.
Like,
You talking about a company that might have a revenue run rate above $500 billion annually pretty soon.
that's
Like,
wild.
think about that. Um, I want to say Google and Amazon are kind of in that same category as far as being $500 billion annually in revenue. But yeah, the to me, I will continue to stand by the fact that we're not in an AI bubble because again, we're seeing consistent revenue, free cash flow, and profit margins
Mhm.
on a lot of these companies. So to me, you can't necessarily say that, that this is a bubble. Will we get to a point where these numbers start to slow down? We'll just have to wait and see. But, when those numbers do slow down, as you mentioned before, the next phase in this whole process is going to be quantum. And
Yep.
I don't think any of these players are just going to disappear off the map, right? They're going to
Nope.
be putting
They're
themselves
going. Yeah.
in
They're going to
position
participate. Yep.
to participate in that next phase. So, you know, um, Jensen Wong, to me, when I listen to him talk about what's going on in the process of what's going on, it really gives you a lot of confidence as an investor, even though sometimes what's kind of happening in the backdrop of the markets, that you can't control, like the bond market right now, the trade
Right.
war with Canada, all of those things are happening in the background. You still know that there are still good quality companies that you can be ready to buy if we see a pullback. And NVIDIA still remains on the top of everybody's list as it should.
Absolutely. Well, Nvidia is taking the center stage this evening when it comes to like earnings and all this stuff. Man, the block party I think is happening at the enterprise software. Go look at CrowdStrike, Okta, Salesforce. I mean, those numbers are crazy. CrowdStrike completely crushed it. I mean, their EPS was what 0.31%, 0.31 versus 0.29 estimate. The revenue value 26% year over year to $1.47 billion. I mean, that's a monster move right there. Okta numbers came in really, really well also. Their EPS was $1.05 and the estimates was zero point 0.6. That's crazy. The revenue rose about 11% to $105 million. I mean, again, Salesforce, CRM. This was a sleeper for a while. Then they're moving now. So again, we're seeing all the software is finally making some moves. Even if you look at Microsoft today, Microsoft was doing well today too. So finally, we're seeing those guys participating, and people find like, oh shoot, there's a whole other segment of the market that hasn't been getting a little bit of love. But while they've been talking about it, man, so let's jump into those numbers and give us your input.
So we've been beating the drum all year about software,
Yep.
right? We have talked about software ad nauseum because earlier in the year, what did we hear? Oh my God, AI is gonna destroy the need for software.
Right.
Billy made a good point about how some of these software companies would have to change how they generate revenue. And if we look at what CrowdStrike put down as far as their revenue for the year, really good numbers, showing a good core solid business. But again, they just had to make a pivot. They had to make adjustments to their business.
Mm-hmm.
We've seen the same thing happen with ServiceNow. ServiceNow has made some adjustments to their business. Now, not all software companies have figured it out. Intuit is one
Right.
that has somewhat struggled. It was down, I think, like 12% today, even though it did finish higher. I mean, higher than that.
Yeah.
But a lot of these software companies that sold off earlier in the year have been areas that people have been able to find solid, good companies for good prices. Now, the area of the software business to me that has been the paramount number one mission critical business still remains cybersecurity. CrowdStrike showed that in their earnings. I mean, their annual reoccurring revenue is now $1.47 billion. And if we look at the stock, I think it was up about 11% after hours. This was a stock that was trading at 227.50 at the all-time high, and it dropped to about 180. Now we're sitting near 207. So this is a name that I think will start to challenge the all-time high. And if we look at other names that are moving in the after hours because of software, we got Palo Alto Networks is up after hours as well. We got Rubrik up after hours as well. So a lot of these other cybersecurity companies have, are benefiting from what CrowdStrike has shown. And I've said it, CrowdStrike has been one of the number one stocks on my list when it comes to cybersecurity. Again, mainly because they do business with like everybody, and
Yep.
cybersecurity again has proven to be yeah, a mission critical business. So, I think if we look at the back half of the year, software has done pretty good
Really good. Yep.
compared to the chip names, because the chip names, they had their party. They sold off tremendously, and it now seems that people are starting to pay attention to what software is doing. So Yeah, just remember where you heard it first, because we talked about this way back in what, January, February?
Yeah, when we first started getting into the New Year's, we talked a lot about that, you know. So
Exactly. Yeah. So
yeah.
we're starting to see that thesis really start to play out.
Yep, but again, like software is not going anywhere, but I think it's starting to be very picky into which softwares are actually going to be able to participate in this, economic boom when it comes to stock market and stuff. But not everybody's going to participate, right? Your
No,
your business has to align with what's going on in the market right now. So if
correct.
your business not aligned, unfortunately, nothing's going to happen for you. Money's going to rotate out of your specific stock into a stock that actually going to make sense. So.
Yeah.
But if you're looking for cheap shoes in the next few months, go look at Dick's Sporting Goods charts. I mean, that bad boy crashed, man. That is wild. To go from close yesterday around 176, maybe like around 180, to drop all the way down to $120. That is a crazy, crazy overnight drop. They have reported a loss in their business. So let's look at these numbers. The EPS came in at 3.53, dropping below the 3.76 Wall Street expectation. The revenue miss, $5.5 billion, coming in short of the $5.65 billion consensus estimate from Wall Street. But I mean, overall, man, like I'm just saying, like we talked a lot about this. Like if you're in a business, in a business to consumer business, some of those companies are gonna suffer a little bit. Except I don't know what's going on with Target. I don't know if you guys have looked at Target lately. Target has been moving like crazy, like
Yeah,
from
they
the
figured some
beginning of the
stuff out.
year. They're figuring something out. I think we hit a low like 100 and something, or did we hit below 100 this year? No, we didn't hit below 100. But I mean, that thing has been moving from January up to now to 164. I mean, it's just been moving. But overall, man, like Dick's Sporting Good. All I'm saying is, if you're looking for some good prices this summer or this going into the fall, make sure you stop by there because I am 100% sure they're gonna be slashing prices because nobody's buying shoes. Shoes are sitting on the shelves. Nobody's participating in buying those shoes. So go get you some shoes, man, for cheap. Well, hey, man, what are your thought on this one?
So, as you mentioned, you know, when it comes to the retail names, some people have been able to figure it out. Some people have
Hmm.
not been able to figure it out. Like I think Abercrombie and Fitch was up what 30% today. Um, Dick's Sporting Goods was down 30% yesterday. So this is one of the reasons why I always tell people if you're going to own individual stocks, right? You need to pay attention to the financials and pay attention to the earnings calls because there are some things that you could have looked at that could have given you at least a heads up that something was wrong with
No,
Dick's
no.
business. So let me walk you through some of the red flags that I pulled up when it came to Dick's Sporting Goods. So you look at and this is another reason why revenue and EPS is not enough. You need to understand what's going on under the hood, what's going on with the business.
Facts.
If we look at the revenue growth of Dick's Sporting Goods from 2022 to 2026, up until their last report, they went from about $12.2 billion in revenue to $21.1 billion in revenue. You'll look at, as an investor, you might look at that and say, oh my God, that is really good. You start looking at gross profits in 2022 was $4.7 billion. So far through 2026, through April 1st, is 6.9 billion. That's a
Hmm.
number. That's a number that has increased over the last 5 years. So you look at that, you start looking at net income. Net income was one red flag. So net income in 2022 was $1.5 billion. Net income to common dropped to $838 million over that time period. So you're talking about a net income that has pretty much almost got halved, cut in half almost. So that's one
Yep.
red flag. But the one financial statement that I always like to pay attention to is the cash flow statement. And the biggest thing that I would look at in the cash flow statement is what am I looking at? One, free cash flow. Free cash flow decreased from 1.309. And this we're talking about Dick's Sporting Goods. So this is a business that's been established for a long time, right? If this is a newer business, a smaller company, you might not look at free cash flow the same, but this is a long-term established business. Free cash flow, Dick's Sporting Goods went from 1.309 billion in 2022 down to 239 million. You're talking about over $1 billion decrease in free cash flow.
Mm.
Huge red flag. Another red flag I want to also look at is margins. And where are their gross margins? Thought I saw that somewhere on here. I might be looking at the wrong page. Let's look at the income statement. Hold on. Where are gross margins? Okay, yeah, operating margin. So look at the operating margin drop over the last 5 years. They were a company that was operating at 16.55% operating margin. That dropped to 11.83 in 2023. That dropped to 10.55 in 2024. Went up a little bit to 10.96 in 2025, and then dropped to 8.66 in 2026. That number now sits at 7.02%. So operating margins have been cut in half over the last 5 years. It's another red flag. So if you see a company whose operating margins continue to decrease over time, that's not a good thing when you're taking a look at what's going on under the business. You also look at profit margins. 2022, the company had profit margins of 12.36%. Then that number dropped to 8.43%. Then that number dropped to 8.06%. Then that number dropped to 8.67%. Then that number dropped to 4.93%.
Man.
So the margins, revenues were going up, but the margins of what they were actually pocketing in the business were continuing to decrease. So again, this is why I keep telling people when you are an owner of individual stocks, you always have to look under the hood and understand the numbers of the business. Revenue is one thing. That just basically tells you, is there demand for their product? Yes, but that doesn't always tell the full story. You got to dig a little bit deeper. And the signs were there for Dick's Sporting Goods. Now, I'm not going to sit here and say that I would have predicted a 30% drop, but this was a stock that if I was a shareholder, I would be a little bit wary of the quality of the business going back to 2022. And then you can probably look at it from a quarter over quarter basis, right? I'm looking at year over year. But if you look at the annual numbers of those metrics for a retail business, not looking too good. So, make sure those are things that you're looking at if you're an owner of individual stocks. 1 quarter and 1 year doesn't necessarily make a trend, but when you start seeing that over a 2 year period or a 3 year period, you need to get a little bit serious about, okay, maybe this is a company that I may not need no longer need to hold anymore. So
Yep. Yep.
yeah,
And like you said, that's the risk you take sometimes with,
when you
when you
individual
buy
names.
individual names. You
Yeah,
really have to know, and there's nothing wrong with believing in a company, but just know the numbers behind it. And
correct, exactly.
that gives you an idea. It's like, oh, there might be trouble down the road. Maybe I'll add more if the trouble happens, because you really
Hmm.
believe in the company. But if you just jumping in blindly and not doing your due diligence, I think you definitely gonna suffer a little bit. But
Yeah,
yeah.
because I always say when you're a shareholder, you're an owner of the business. You're a
Hmm.
small owner, but you're an owner of the
Your owner.
business.
Yep.
So treat it as an owner of the business. You own the stock. You want to know what's going on with the business. So,
Yep.
if
Yep.
you don't want to do the work, mutual funds, ETFs are another route you can go where someone else kind of does that on your behalf. It's
Yep.
not a it's
Yep.
not a it's not a bad way to go either, and to diversify your risk. But if you're an individual stock owner, because imagine you wake up one day and your stock is down 30%. We're not talking about options. We're talking about the stock.
Hmm.
30% in one day, that's a crazy move. So Yeah, just keep that in mind as an investor. Pay attention to the quality of the business, and those metrics we just went over are things you want to take a look at on a regular basis just to make sure that the business is not falling apart.
Very, very, very important. Well, let's move on to Open AI, man. I mean, while everybody's still again focusing on NVIDIA, what NVIDIA is gonna do. I mean, this one gonna surprise me a little bit, and I was like, "Whoa, what is happening?" You know, are they? Because we talked a little bit about OpenAI and them trying to come up with a new product. I was thinking it's gonna be a new phone, or to kind of like rival, Apple and all this stuff. You know what I mean? So instead of paying Apple to download their apps every single time, they can just build their own phone. And we can utilize their phone, their OpenAI phone, to be able to do run queries with ChatGPT without having to necessarily pay Apple any shares. But OpenAI surprised the market. They dropped their own chip. And it's funny, the name is jalapeno. I don't know why the name is jalapeno. I have no idea. Somebody was trying to be funny out there, but they might name it jalapeno because it's gonna be hot. I don't know. It's crazy. But this chip is a hyper specialized inference chip built for completely blank state, exclusively to run large language models and answer user queries, right? So it's all about the economics, about serving over 800 million weekly users faster and infinitely cheaper. So by them producing their own chip, that's probably going to make it cheaper for them to be able to scale up and be able to kind of serve the user a lot faster instead of just depending on NVIDIA's chip, basically. Now, how does that impact NVIDIA? I mean, they're still partnering with NVIDIA. They still buy NVIDIA's chip, right? But in the long run, are we gonna see more of those companies just building their own things? Like, hey, look, instead of me keep giving you guys money, I might kind of scale up a little bit and just start building my own. And honestly, I think, in my opinion, I think Jensen Kwan kind of shot himself in the foot when it came to like some of those conversations that he was having. I feel like he should have kept some of those things to himself. Like,
Hmm.
especially when he was talking about, I wanted NVIDIA to be the basis of all different, NVIDIA's chip to be the basis of all what AI is built on top of. It's like, when you start scaring people like that, they're gonna start looking somewhere else. I mean, we see Meta's doing their own thing. Apple probably gonna start doing their own thing. Um, what OpenAI is doing their own thing right now. So who else is gonna join this? Who else is gonna join this and start making their own chip? And what kind of chaotic environment this is gonna create? I mean, so I don't know, man. Let me get your feedback on that because I feel like it's a good thing for OpenAI to be able to like start building their model on their own chip. I don't know how good it's gonna be, but it's also a risky move, right? If they became really really good and their chips really really scale up and became really really better than what Nvidia has, what does that mean for Nvidia? So let's talk a little bit about that.
So remember when we look at AI, large language models, and the whole, I guess, process of going from getting putting an inquiry to getting an answer, that there's two pieces that you have to put together:
Yep.
training and inference. On the training side, NVIDIA still dominates that
Mm-hmm.
because the GPUs are still more, they're like the Swiss Army knife of the chip stack, where you can train them to do almost anything, no matter
Yep.
how, where you want to pivot, no matter where you want to go. The GPUs are still the number one um, go to for most customers.
Mm-hmm.
On the inference side, we're starting to see people start to create more specialized chips like Cerebras. Cerebras talks about that their chip specializes in faster inference. We're hearing OpenAI's Jalapeno chip trying to um, is specializing in fast inference. And the reason why inference matters is because that is the one part of the business that they don't have control of.
Right.
They don't know how many customers are going to be asking questions and typing in prompts. No one, they don't know that. But they need to be able to have the workload and the chip stack to handle those workloads. As adoption increases, right, over time, you're going to get more inquiries, more prompts that requires more energy. So one of the numbers that OpenAI put out, it says that Jalapeno delivered roughly 1.5 to 1.9 times greater AI thorough output per watt and 1.7 to 3.36 lower end-to-end latency.
Mm-hmm.
So basically what it's saying is that their chips are using less power and also providing answers faster. Because remember, the more people that use AI, the more prompts you have, the energy bill just keeps going up.
Going up.
So
Yep.
you have to be able to control your cost or your margins are gonna get hit hard. So to me, the chip piece of people customizing their own chips is a cost cutting measure, as you mentioned earlier, that they're trying to control cost on the back end. On the
Yep.
front end, they know what they need from NVIDIA to train their models. But on the back end, they don't know how much their customers are going to be using their product, where they're going to want to be able to control that cost. So I think it's going to become more and more common. And I'm trying to wonder if NVIDIA has a countermeasure to that. They bought a company called Grok, right?
Mm-hmm.
I think that was part of the reason why they bought Grok. That might be part of the reason. I'm not too familiar with what Grok's chips do. I want to say that they might be mainly used for inference. So that might be one of the strategic moves that NVIDIA made by buying that company, Grok, so that they could at least compete in that space. And basically, whoever has the faster chip that uses the least amount of power is going to continue to win. And that's what people are going to be looking for because they want to keep their margins high so they're not spending a ton of money on power. That's what I see it as because I don't think you can completely cut NVIDIA out of the ecosystem because of the GPUs,
Right.
but
Right.
I think you can wean off their dependency on them for the entire process. Yeah.
Yeah. Yep. Yep. And I mean, if you're smart, I mean, you would start thinking about that because imagine if like Nvidia has like the dominance when it comes to all the AI chips. Like, I mean, it's scary, right? To have like one company control the entire market. Like, it's a little scary. So, I think you see companies like Meta and even like OpenAI and some other ones that are probably going to be joining them. Is they're going to start designing their own chip just to have something on the side just in case Nvidia start acting up and raising money and all this stuff. Because every empire is gonna essentially want to get bigger. So Nvidia,
Yeah.
yes, they might be playing, they're big, but they're not as big as they could be. In my opinion, I think Nvidia can get way, way bigger than what it is right now. But
Yeah.
overall, I think some of those companies are making smart moves. They have good partnership, but it's like they're making some smart move to be able to at least recoup some of that, some of them. Because imagine if all you do is rent from somebody else, you're not seeing any shares of that money coming back at you. That's a huge revenue that your investors might be looking for. They're like, hey, you might be stagnant at this number, but we want to see more revenue growth and all this stuff. So again, I think it's a good move, but I don't know. We'll see how it pans out for them.
Yeah. Because they're still business partners. So we'll
Yeah,
we'll see we'll see what the long term story is. But I always tell people at the end of the day, I don't care who creates their own chips is getting built by TSMC. So
that's crazy, right? They're crowding this little area right now. Like they want to make their own chip, but it's like all of these companies.
they gotta go to
They just
TSM.
all they do is design. All they do is design. They're designing their own chips. Like when OpenAI comes with like we came up with our own chip. Just know they didn't go in their factory and make it their own in OpenAI factories.
No,
Oh, they designed it and sent it over to somebody else to build it, which is more than likely 99% of the time is gonna be TSM.
gonna
So
be TSM. I,
yeah,
I still I still want to see if Intel is gonna announce any big manufacturing deals. They kind of
they
I
kind of
wouldn't say
got
they
quiet.
Yeah, they kind of been flying under the radar as of lately.
Yeah.
But that's another company that is an actual chip manufacturer in the United States. That again, if TSM is overworked, I think the other U.S. based company is Intel, and then you got Samsung if you want to do it in Korea. So
Yep. 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 But let's move on to our last topic of the episode, man. Let's talk about this thing going on with China. So the US is basically trying to discourage anybody from doing trading with China, which is kind of like for me, if you think about it, But think about it. Let me give you
Not
guys a
China, not
breakdown.
China, not China, Iran.
Iran. But here's the thing: the war that was supposed to last maybe what 4 to 5 weeks, it's going on 6 months. That's the biggest thing. It's going on 6 months. We tried everything. We tried bombing them. We tried putting restrictions on them. We even tried putting a ceasefire deal in place. Them people are not budging. Like they're like, and if you look at Iran, yeah, go look at Iran. Go look at how small that place is. Just go look at it compared to the US. You know what I mean? And for you to have this little country that just a thorn in your side, like you tried everything. You beat them up, they get up. You bomb them, they get up. You take stuff away, they're still up here. They're still like, no, we're still gonna show up. But I am curious to see how we actually gonna get this accomplished. Because if you guys really like look at history, Iran has always been under some type of sanctions from the whole entire world. You know what I mean? And the reason for that is the nuclear program. I mean, they have other stuff that that the West or even like the Northern Europe that they don't really like mess with them like that, right? But if you look overall, Iran has always been under sanctions for one reason or the other. And what I mean by sanction is always going to be economic sanction. The reason why Iran was like in such a, I don't know if you guys remember, like people were in the street of Tehran and being basically protesting, and some people got killed and all this stuff. It's because of a sanction, economic sanction that was put on them that caused the inflation numbers to go like crazy. Their money wasn't worth even anything. People weren't getting jobs, food prices, gas prices, like every necessity that you need to use to be able to live was very, very, very expensive. And that's because the US put a ban on them from anybody from trading with Iran. So imagine this, your big brother telling me like, if you go mess with Iran, guess what? We're gonna take everything away from you. The biggest global power, economic power in the world is telling you don't do anything with that specific country. This is what I call the economic sanction war. And it looks like they're going back to that. So I was like, in my mind, I was like, they're already under a sanction before we started this whole war with them. What benefit are we going to gain from putting them back into a section? Matter of fact, we have allowed Iran to now be able to gain enough, control over the Strait of Hormuz, which even with the sanction, they kept it open. You know what I mean? Even though they were trading, like maybe they were only trading with China, and that's a whole different conversation. China is their biggest supporter right now. You know, how does that going to impact the relationship between the U.S. and China? Are we also going to put sanctions on China? Are we going to try to mess with China somehow? I don't know. I think this is going to be a really messy sanction. I don't know, man. I think it's going to be really, really, really messy. I wouldn't be surprised if we come down to the last minute and we're like, all right, we're not doing it because they evaluated all the outcome that's going to come from that. You know what I mean? So, yeah, man. Let me get your opinion on this because I don't know how this is going to go.
Yeah. So China already basically gave the United States the middle finger and said, I can't do that
Mhm.
because you have to understand, again, as you mentioned, I think what 90% of Iranian oil goes to China.
Yep.
China is not an oil producing country. They're a large industrial country. So
Hmm.
they need to get oil from somewhere.
Yep.
And Iran has been their business partner for a long time. So the US has basically said that if anybody does business with Iran, we gonna hit y'all in y'all pockets and we gonna fight back. And
Hmm.
China talking about we not having it. And let's be 100% honest, China is a superpower. They're not some small country that you can just bully,
Yep.
right? So I don't see China stopping getting Iranian oil. The US is probably not going to be happy with that. What will be the consequences of those things? We'll just have to wait and see. Um,
Tariffs.
yeah,
More tariffs.
yeah, either more, I don't know, tariffs, I don't know. Um, and it seems like even with tariffs, other countries don't care. They like, we gonna hit you back. Look at Canada.
Yeah.
Canada said, they
That's a
said,
whole nother that's a whole nother thing. Yeah.
bar for bar. You want to hit us? We gonna get y'all back.
Yep.
So the stock market on a micro level, when we look at various sectors and businesses, it's doing very well. Like we
Hmm.
cannot ignore that. But the macro backdrop is not. pretty. It's not. We don't know how far it's going to escalate. We don't know when it's going to start to show up in the stock market, but the bond market continues to give warning signs. Yields are going higher. Inflation is not coming down. The Fed has not acted. So always tell investors, don't just be so hyper focused on your stocks. Understand the environment that they have to operate in.
Yep.
So if something does happen, you don't get caught with your pants down. So pay attention to what's going on in the background. Now, how
Mhm.
how soon is the US giving other countries to cut off all ties with Iran? I don't know. I really don't know. But the offensive aggression of bombing them and all this stuff didn't work.
Nope.
Now they're going to economic sanctions and they're trying to hit them in the pocket. Whether that works or not, we'll have to wait and see. But yeah, this is to me, this could get very messy, especially if China starts to push back. So, like, if
Yeah, it's
I
it's
think
gonna be
she's,
interesting.
yeah, she's supposed to visit the United States. What if he wakes up one day and he's like, man, I'm not going
Right.
no
Yeah,
more.
I ain't doing this. I ain't doing this. But the funny
So,
thing also, Trump has always talked about wanting to have a better relationship with China. So I don't know
mhm,
what is this gonna do in terms of relationship. Is this gonna derail it, or is
I
this
don't
gonna
know.
be, or what politicians normally do is they put things in pockets, right? Like we're not gonna touch this pocket, but we're gonna talk about all of those other things like minerals and all this stuff. We're not gonna talk about that Iran thing. This is something that we're still working through. So I don't know. But like you said, man, China is not gonna let Iran go because it's like that's their. I mean, it's closer to them. The ship literally doesn't have to go across the world to reach them. Like it's yeah. They're not gonna let Iran go. They're always gonna support Iran because that's like their pipeline for oil and stuff.
Exactly. And we saw what, we saw what the United States tried to do to Russia. Saw how that turned out. Russia's still operating.
Yeah, yeah, yeah.
So
We completely not talking about Russia anymore. Like we completely stopped talking about that. Like in the beginning of the year was Putin, Putin this, Putin this, Putin this, and now where's Putin? My man is joining his country.
Exactly. So we'll see how this plays out. But I always like to tell investors, this is the stuff that you just have to be aware of. We don't know, again, we don't know when it's gonna affect things, but it's kind of like last year we saw a Liberation Day. Like, right? Trump got elected. He's talking about tariff, 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 tariff. It didn't hit the fan until what, March, April of last year.
Yep, yep,
So same thing with this. We see what's building up. Does it get worse before it gets better? We don't
yep.
know, but just don't fall asleep at the wheel. That's all I'm gonna say.
Yeah. But the other thing too, also, don't forget the politics in hand. What is
Yeah,
coming up in the next couple of months?
yeah,
Midterms are coming up.
exactly. Yeah,
So you got to remember all of this. All of this might just be a show. All of this literally might just be a show. So
yeah.
midterm is coming up. Once midterm is over, we're gonna be back to business as usual. So I won't be surprised if you start hearing some more decisions coming up to just kind of stir people up and be like, "Hey, look, we're doing something. Go vote for us," and all this stuff. But it's like you still got to look at the overall what's going on in the country right now, for why those some of those decisions are being made right now. You know what I mean? So
Hmm.
just keep that in mind as you look into some of those news, man. Just like
Yeah.
nothing is surprising. That's what I can say.
Expect anything, right?
But let's look at some of the economic calendars coming up this week, man. We have tomorrow. We have the 8:30 a.m. the jobless claims, and then the Jackson Hole Symposium is happening also starting tomorrow. So that's going to be an interesting one. I wonder how the Mark is gonna react to different speeches that's coming out from these guys. Whatever notes we get from these guys. So we'll see. We'll see how the market reacts tomorrow. Right now, it looks like everything's kind of like up right now after hours, but I don't know what we're gonna have tomorrow when the market opens. Again, more volatility tomorrow. Hopefully, we have broken through that threshold. I mean, I was looking at SPX. That 7,700 was a really, really sticky level. And it looks like we broke it after hours. So again, we'll see where we end up tomorrow when the market opens up. And then Friday we have the Chicago PMI, and then the Fed Chair Kevin Warsh is speaking at Jackson Hole on Friday. So that's again is going to be one of the most anticipated speech that everybody's going to be looking out for. So Friday, again, we still have some volatility in the market to see exactly what's going to happen there. But yeah, Wale, any of those you watching for? I know you definitely probably keeping an eye on those speeches that's coming out from the Jackson Hole, but anything else you're looking forward
Yeah,
for?
I just want to see what Kevin Warsh is going to say because he's kind of just been all talk to me, right? He ain't really showing me nothing. He just kind of just
He's
bumping his
coasting.
he's just bumping his gums, right? And I kind of get it. He just got there. Maybe he's observing, he's building data, he's looking at things, but you have run way above your 2% target for a very, 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 very long time.
Hmm.
I mean, I went back to 2020. I posted something on my page. It says the annual compounding rate of inflation since 2020 is about 4%. Um, and that's double what the Fed wants. So how do we get back to 2%? You don't got that many options, my friend.
You really don't.
So sometimes you need to just rip the band-aid off and just get things over with, right? Like, can you imagine if Jerome Powell had the same attitude when we had inflation at 9%? Now, I
Man,
will say this. The Fed was a little bit late when it came to raising rates, but they eventually did do it.
yep.
They were a little bit late, but they eventually did do it. But the longer you drag it out, the worse to me it's going to get. So, you know, like look what Jerome did. 2022, they came out and they said, "All right, let's just start doing it." It probably should have
Hmm.
started earlier, right? But they didn't. But 2022, they made some significant progress in bringing down inflation
Yep.
from where it was to where it eventually ended up. So, Kevin Warsh to me has the same issue. But I will also say that the $40 trillion national debt may not make it as easy.
Yeah.
So, man, they're saying that Scott Bessent may tap the general account of the US to help bring down bond yields. Usually the general account is not used for stuff like that.
Mm,
So,
mm, mm, mm.
yeah, I don't know, man. There's a lot of things that worry me in the background. So don't
It- man, I don't know who's running the country now. I don't know.
yeah. I can't remember the last time I've heard of a of a um Treasury Secretary going to the general account to to buy back bonds in the open market. I can't remember the last time that happened. I'm not saying it hasn't, but I can't remember the last time that happened. So
Yeah.
yeah, we'll see if that works. But the bond market already told them what they thought about that $4 billion. They were like, oh, they dropped and came right back. So we'll see. If we see a 5% 10-year yield, ooh, that's not going to be good. That's not going to be good. So I've been paying attention to bond spreads. They continue to climb. They continue to climb. So, I always tell people the bond market will give you signs of weakness before the stock market does. So don't 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 completely ignore what's happening. So I'll leave it at that.
Man, that's I don't know. Like something's always brewing under the hood, but you never know when that what is that one incident or one thing that's gonna happen that's gonna bring everything back to your knees. But we'll continue to keep an eye on it. It seems like the stock market's not really reacting too much to a lot of those moves. So we'll see what happens in the next couple of weeks or a couple of
Yeah,
months, even next year. We'll see.
yeah.
But let's
But
move on to next week, man. Oh, go ahead. You said something?
I was gonna say that the one thing that it hasn't translated to on the stock side is an elevated VIX. We haven't seen an
Yep.
elevated VIX yet. We started seeing
Yep.
elevated VIX with everything that's going on. That would be my sign to be a little bit more cautious about what could happen if this doesn't get solved.
Yep. 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 And then next week, man, because you guys believe it, it's already September. It's crazy. This month seemed like it just flew by. But next week, we are going to enter a new month, and it's going to be the last. Is that the last? No, that's the first quarter of the last. No, what am I talking about? This is the
October's October is
October.
the start of the fourth quarter.
I see.
Yeah.
I'm gonna.
September is the end of the third quarter.
The third quarter, yes. Hey, I was
There
like,
you go.
wait, what am I saying? But yeah, I can't believe we're almost like at the end of the last quarter, man, of the year. We before we know it, it's gonna be 2027, and a lot of things that we talked about, it's kind of coming to, to fruition here. But some of the earnings that I'm watching for next week, Tuesday, September 1st, we have Palo Alto, Dell, MongoDB, and GateLab also reporting that week for that, I mean, that day. Wednesday, the September 2nd, we have another group, man. We have Broadcom, AVGO, Snowflakes, Snow, and HPE, Hewlett Packard, also reporting. And then Thursday, we have C3.ai. That company hasn't been doing too well at all. I mean, how do you have an AI on your name and your stock is trading? What are they trading at right now? Jesus Christ.
That stock been in the dumps.
$9. Interesting.
Yeah, that stock been in the dumps. And if I'm not mistaken, yeah, they were what in 2024 they hit a high of what $45. Now they're at what?
Mhm.
Yeah, maybe they just waiting for a buyout. Maybe they file bankruptcy.
Probably. We'll see.
Yeah,
And
but
then finally we have some Sarah and then Lululemon also on September 3rd. So those are the ones that's coming up next week. But before we wrap up, man, Wale, any last minute talk or any last minute advice you want to give to people as we close out this week?
nah, I think that's pretty much it. I know there's a lot of people that believe in Nike. Nike's under $40. So
Finally.
if you a believer, I'm not a believer. Um,
Sheesh.
I'm not. I could be wrong, but I'm not a believer. It hit a new low of 38.41 this week.
This is just ugly, man.
And they haven't done anything to change the story. The execution hasn't changed. Um,
They're not doing
so
anything. They're
yeah,
literally not doing anything.
yeah, hasn't haven't done much. But somebody who's looking for to take a gamble.
Bro. Unless if somebody announced that they're gonna buy him out, then we might see a run up. I don't know who's gonna buy him out, but
I don't think anybody has the money to buy out Nike, to be honest with you. And I knew it was bad when I started getting Instagram ads of Amazon selling Nikes. That's when I knew it was bad. and I'm not
and it's really bad now because
and I'm talking about Jordans.
that's wild.
You can buy Jordans on Amazon. So that just tells you what's inventory. Yeah, inventory.
And
But I know
this whole thing with Dick's Sporting Good is not helping either.
nope,
So,
it's not. That Foot Locker acquisition looked like a dud.
oh, that was a horrible move.
Yeah, horrible move. So yeah, footwear, man. Some of the big names that everybody thought was Teflon, they driving a struggle bus right now. So,
Yep, yep.
but hey, I'm not saying they can't turn it around, but they just haven't shown me any signs that they're pivoting their strategy yet. Haven't seen it.
Man, listen, if Nike loses $35, I think it's going back to like the 20s.
If
Damn.
it if Nike goes to $20 from here,
Yeah. If they
yeah,
lose
but
35, I think they're gonna hit 20. They have like the
if
20s at least.
if Nike gets to a $20 stock, the world might be ending. we
Bro,
we might
they're not that far.
we might have some bigger issues if Nike's a $20 stock.
They're not that far. They're not
Yeah,
that far. I'm looking at this 35 level. Like, if they lose that shit, I don't know, man. We'll see.
yeah, we'll see.
Yeah, but with that being said, we appreciate you guys always joining us. Again, if you guys have any questions, let us know. Reach out to us. But with that being said, man, we'll see you guys.